Boom. We are alive, ladies and gentlemen. I'm very excited to bring a very unique guest to you today, founder and CEO of Avalabs, the brainchild behind Avalanche. Emin, how are you doing today?
Awesome. How are you doing?
I'm doing fantastic. It's really great. Thank you for sharing your time and deciding to come on and have a conversation with us. I want to start with something a little bit more personal. So do you want to maybe just tell us kind of how you, like the kind of your early years and how you got into the blockchain sector itself?
Sure. Let's see. How far back do you want me to go? To the
Wherever you think feels relevant.
Well, the relevant part. Okay, here's the relevant part. I got into computer science very early on. I wanted to build AI and so forth. I realized very, very early on that all this AI stuff was kind of far-fetched at the time, and that we didn't know how to build things that work. It's so hard. Back in think about the good old days when Windows would crash. You would get the blue screen of death. I think there's a demographic that knows what this is incredibly well. I think there's a young crowd that may have never seen one. But you would go to a bank and they would say, "I'm sorry, sir, could you come back, tomorrow because our systems are down." This was a daily occurrence. This was normal. Checkout counter at the airport, we're going to have to do manual operations. So I figured I have to leave aside, my dreams of building super intelligent assistants. That's just not where we are. We need to build super reliable systems. So I got into operating systems. I started looking into the most sort of the fundamental layer of technology. And I worked in graduates. So I went to Princeton for undergrad. I finished that and I thought, okay, I need to study some more. This is really exciting, but it's going to be expensive if I take a master's. Why don't I go to a doctorate program? And, I'll leave after a year or two with a master's and they will have paid me to study. These guys are kind of stupid or whatever. That's what I thought. But the joke's on you, of course, when you go to grad school. It sucks you in and you get bitten by that whole research thing and you can't leave. So I found myself doing research on operating systems. I found myself getting really excited about distributed systems. And then I graduated from grad school. I became a professor, a very young assistant professor at Cornell University. And one of the biggest topics then, the thing that was happening in early 2001 was the emergence of peer-to-peer systems. And so these are systems that have a life of their own. They're really cool. They're inherently reliable. They have to be designed to withstand bad actors. So actors inside them can be Byzantine. They can attack the system actively, and yet the system has to preserve its service guarantees. And one of the biggest problems, of course, at the time was file sharing. And on those networks, people would always download files and nobody would want to upload files. Uploading is a risk. It also sucks away your bandwidth. And in fact, as you well know, Theo, every time humans are involved, this is a common problem. You go back to Hume, you go back to Jean-Jacques Rousseau, whatever. It's like always, the problem is there's a society and there's a bunch of people who want to extract things and nobody wants to contribute, right? This is so common. And so this was 2002, and my approach to this problem of file sharing, the tragedy of the commons and file sharing was, why don't I design a system with some kind of magic internet money that you get out of the thin air when you join? There's no minter, there's no central authority, you should just get it. And then you can use it to buy the songs from other people. And then when you run out of money because you're downloading this stuff, then you have to sell some stuff you've got and help other people to make more money, right? It's just to build an economy around this magic internet money. So the resulting system is called Karma. It was published in 2003. And in it contains and describes the idea of a coin that's minted by proof of work. So it's the first such implementation of a coin minted through proof of work. Now, let me be clear, I'm not taking credit for the Bitcoin idea because Satoshi is brilliant. And I was using proof of work for minting, but I was using a classical consensus protocol. And Satoshi came 6 years after me, and he came up with a brilliant idea of combining the two. So his consensus protocol and his minting scheme are combined into one. That mining process mints and achieves consensus at the same time. It's a brilliant, brilliant breakthrough. So I didn't have that. He brought that in. But I did have some of the cool ideas. Anyway, so then, Bitcoin came along. I looked at Bitcoin with Itai Eyal, who's now a professor at Technion. He was a postdoc at Cornell. We discovered the biggest known flaw in Bitcoin in 2013 called selfish mining. We worked on security of coins at rest. I worked on layer 2 protocols. I built the fastest layer 2 protocol. I also worked on lightweight consensus protocols. And most recently, we created this new network called Avalanche using a new consensus protocol called the Avalanche Consensus Protocol. So, and it's the world's fastest, quickest blockchain network. And I'm really excited about what it can do.
So I want to touch on two things here. So first off, I would like actually to go back and go over the selfish mining idea, because I think a lot of people are under the assumption that Bitcoin is just functioned flawlessly with no problems. And I think that was a fairly big one. But I also want to, as a heads up, one of the ways I found Avalanche is I call him tech team. He's a friend of mine that's significantly more in tune with the development standard side of things. And in 2017, he tried showing me Chainlink. I'm like, I don't understand this stuff. And he didn't have the heart at that moment to explain it to me conceptually. So this time, when Avalanche came along, we had a much more, let's say, a personal conversation to try to explain why the tech was relevant, because just having a developer conversation isn't necessarily going to show me the upside. It usually needs to be more conceptual, and then I can grasp it. Once I kind of figured out the concept, I was like, I think other people have called it like the single greatest invention since the Satoshi consensus mechanism. And I agree. I think that Avalanche is highly undervalued at this moment because of how many cool things it puts together from the conceptual standpoint. I would like to go to that next, but can we go back to that selfish mining process? Can you explain what happened there?
Oh yeah. So let's see. So what happened after Satoshi came along? Satoshi invented the new consensus protocol. He looked at all the academic work on consensus protocols, and he said, these things, they're very fragile. And these academics are trying to build these incredibly limited systems that will never really scale to an open financial system. And he came up with a new mechanism for achieving consensus. This mechanism uses at its core this notion of mining. And so what essentially happens is the participants to the system, if they are able, they solve certain computational puzzles and they add blocks to the end of a blockchain. So you end up having some data structure that's linear, and you're adding, it's kind of like adding pages to the end of a book, and each page contains a summary of the transactions that took place. Alice paid Bob, Bob paid Charlie, that kind of stuff. And so this mining process, the way Satoshi thought about it, the way Satoshi envisioned it, and most importantly, the way Satoshi analyzed it for security, it's a cooperative process. He implicitly assumed that people would follow what he told them to do. And Itai and I, we looked at this process and we thought, well, I wonder if this, that is what I wonder if what Satoshi claims about his system is correct. And so Satoshi made certain claims, and the developers, the core developers, the Bitcoin core developers were making a lot of noise saying, oh, Bitcoin is secure under the following conditions. And they were repeating this without any proof. So Itai and I looked at these. These are what are called folk theorems, things that people repeat, things that people believe to be true, but things for which there is no proof. So Itai and I looked at this, and we realized that inherently all of those claims, all of those folk theorems took as a supposition that everybody followed the protocol as Satoshi told them to do. And so the obvious question is, can you break the system by doing something other than what Satoshi is telling you to do? So the short of it is, there are these claims that a lot of people have heard, which is Bitcoin is secure as long as a majority of the miners are secure. And there are some subsequent claims, which is Miners make money in proportion to how much hash power they have. This is also important. If this is not true, then miners will have a, if you're a 10% miner and you make 10% of the rewards, that's good. If you're a 20% miner, you make 20% of the rewards, that's good. But if the 10% miner makes 8% of the rewards and 20% miner makes 22% of the rewards, then the system has a centralizing force built into it. And so that's bad. That's a terrible thing. So that proportionality theorem is also false. And then the third claim is the system is incentive compatible. That is, you follow what Satoshi tells you, and if you deviate from it, you're going to lose money. That's something that people kept repeating as well. So Itai and I showed that all three of these theorems are absolutely false. Bitcoin requires more than a majority to be correct. Bitcoin requires a supermajority to follow the protocol as Satoshi told them to do. And we came up with a scheme called selfish mining. It's a strategy that any miner could follow. And depending on essentially what else is happening inside the network, that miner can make more money than their fair share. And if a miner gets into that kind of a situation, then there's an incentive for you not to do mining on your own, but to join that guy. And that creates a big centralizing force. So we came up with this mining strategy. It is the biggest known flaw in proof of work systems. And we also came up with a remedy for it because it's not at all a desirable thing. And it's quite a surprising result. If people are new to Bitcoin, if they don't quite understand the technicals of it, if they don't quite understand the foundations of it, the result is quite surprising. In fact, even for people who do understand it, they misunderstood the system that they worked on. Even some of the core developers tried to deny it at first. So it's really surprising. It's really, I think, an interesting finding. And it was really fun working on it and discovering this and saying, hey, guys, you've been saying a bunch of stuff for years, but, it's incorrect. So when you do this, of course, I can tell you the aftermath, which is probably your next question. Like, what happened afterwards? You say this, then what? Well, when you say this, then you get roasted. You get attacked. You get death threats. You get crazies, doing everything they can. They start writing to your employer. It's like everything is on the table for these people because they are far too vested in their coin, and they will come after you to try to disparage you, to try to essentially shut you up. And one of the funnier things that they did was the crazier elements of the Bitcoin maximalist crowd back then crowdfunded a bunch of people to prove us wrong. So clearly this is a bunch of academics making a bunch of claims, blah, blah, blah. They're clearly false. They misunderstand. I mean, you know this. You misunderstand Bitcoin, etc. Even back then, people were repeating these bogus lines. So they crowdfunded multiple efforts to build simulators to show that our strategy of selfish mining was bullshit, that it was not going to pay off, that Satoshi is, as you know, he's untouchable, right? He's perfect. He never made any mistakes. But he made implementation errors in the code itself. He made poor choices, bad design decisions. But much more importantly, we have to grant to him that he's brilliant. He invented something really cool, but he mischaracterized it. And if you don't understand what you're building on, then you can't adequately protect it. So what happened with the simulations is people funded multiple projects. Every single one of those projects simulated and rediscovered that the selfish mining results hold. And every single person who headed one of these simulation efforts came out saying, you know what, these guys are saying, what they're saying is correct. And so they became our staunchest supporters. They went from complete disbelievers to staunchest supporters. And to their credit at the time, I think the Bitcoin community, the devs, etc., were actually nice enough back then that they admitted scientific truths. And so we ended up, I ended up getting invited to all the Bitcoin events and so forth because, obviously we know a thing or two about consensus protocols. And then things blossomed from there. Then we started looking into. I mean, this is all net good for Bitcoin. So ever since the selfish mining paper, you do not see miners exceed the 34% threshold. Right? When they do, everybody puts pressure on them. And we have seen that happen. Some miners actually crossed, there was a time when a single miner crossed the 51% threshold, actually. So that has happened. But when people cross the 34% threshold, we now know that that's very dangerous. The technically savvy communities push back on miners that are getting too big because they represent a threat to the system that they're supposed to serve. So that's the short of the selfish mining story.
I love it. That was great. I love that. I didn't know that. Thank you. I'm glad we went down that rabbit hole.
Oh no, this rabbit hole, it's still ongoing. It's like flat earthers. There's a group of people who still don't believe selfish mining. They still call it like the selfish mining lie. It's just like, okay, you can call it whatever you want, but it is there. You write your own simulator and take a look. It's like
so fundamentally, the core code was never, let's say, upgraded or fixed to patch that error over. It is an error that is basically stuck in the consensus mechanism. That's correct?
The Bitcoin protocol does not have a remedy for selfish mining. So if you have a miner that's 34% or larger, it would represent a threat to Bitcoin. Luckily, there is no such miner today. There hasn't been for many, many years. And when miners do get big, everybody puts pressure on them to not, that it takes away from the decentralization story of Bitcoin.
Great. Well, yeah, that's fun for me. See, I knew that there was a few, and specifically that there were flaws, some that have been fixed. I didn't realize that there was something that was an ongoing problem. That's fascinating. So this brings us to the second part of before the rabbit hole, which is this new version of a consensus mechanism. So back in 2017, I started to hear whispers of things like a DAG or a directed acyclic graph, which were using multiple Merkle trees, if I'm correct, to be able to keep track, to have a faster, again, my tech savviness is like not even non-existent. We'll say it's non-existent. So I may be saying things incorrectly here, but
no, you got it. You got it.
Okay.
I'll explain it. It's not that complicated, but go ahead.
Okay.
What about that? So you were hearing.
I started to hear whispers in 2017 of these of kind of multiple blockchains working together to have a higher throughput and to again kind of expand on the technical innovations that Satoshi had made in the first place. So when my tech team or my friends started to show me Avalanche, it's like, oh, okay, like I had heard about stuff like this before. This looks great to me. I want to learn more. So. Yeah, we'll leave that. We'll leave the ball at the court. Yeah, I was like, I'll put the ball down. I'm like, okay, that's as far as I got in the technical side of things.
Oh, okay. So the DAG is not the important thing in the Avalanche protocol. So essentially, so what's a DAG? So let's just kind of settle that discussion at least. So very early protocols like Bitcoin, Ethereum, etc. These are totally ordered protocols. They build a chain. Right? There's block 1, there's block 2, there's block 3, there's block 4. They build on each other, and every single transaction you can say which one came first. Did this one come first, or did that other one come first? So that's good, but it's highly serialized, right? And if you think about it, this is not how the world works, right? So I could be paying somebody right now. And one of our listeners right now could be paying someone else, and we might never know which one happened first, right? We might be paying at the same moment. God looking down upon us, the God's eye view would be able to tell who's first. But from our vantage points, it might be impossible to tell who's coming first. If you try to force us. If you force me, so like there's probably somebody in New Zealand doing a payment right now, and I'm doing a payment right now. So if the payment system requires me and the guy in New Zealand to serialize, I have to be like, yo, just whatever your name is, you go first, I go after, you take this slot, I take this slot, etc. That causes what is technically called over-serialization, over-synchronization. Both terms are used. So that requires a lot of effort. And in reality, for us to keep tabs, we don't need to serialize. He can pay, like Alice can pay Bob, and Charlie can pay David at the same time. As long as those two paths of payments don't intersect, don't involve each other, then you can do these payments in parallel. So one of the key observations that allows, or well, not so key, but one of the observations that allows Avalanche to get high speed is it allows these two different transactions to be committed to the data structure at the same time. And the data structure is not a simple chain. It's not block 1, block 2, block 3. It's a bunch of blocks at different heights. There's block 1A, and then, so let's just go, there's block 1, and you can have block 2A and 2B. And 2A and 2B could happen at the same time. So 2A contains Alice pays Bob, and 2B contains Charlie pays David. These are independent transactions. They happen, quote, at the same time. They are not ordered with respect to each other. So the network could be finalizing one transaction while the rest of the network is finalizing the other transaction. This is one of the ways, and you could have thousands of these in parallel. So this is one of the ways Avalanche gets its performance advantages. But at its core, behind the scenes, the way the protocol works, the way it achieves consensus is fundamentally different from everything that came before it. And I don't mean this lightly. My area of distributed systems has been around for 45 years. And in those 45 years, there were hundreds of protocols that academics invented. And Satoshi did this nice move with his hand and said, look, you guys, you academics, I'm going to just toss you aside. These are not suitable for open networks. In fact, the best protocol invented by academics, the fastest, the first author on that paper is Ted Ma-Fan Yin. And Ted is my graduate student. So I sent him to the West Coast. He worked on a very cool project. He came back and said, hey, I worked on a really cool project. I think it's going to be fun. And but I want to work on something much bigger. And he started working on the Avalanche project. That project, the best classical protocol invented by academics, is now at the core of Facebook's Libra effort. So Ted's summer effort has turned into the Libra consensus protocol. But all of that work, Satoshi said, this is crap. It's not going to go anywhere. It's just too unscalable. So Libra, it's going to admit 100 validators or 100 participants to the consensus rounds. So it's just too small. So that isn't going to go anywhere. Then we've got proof of work protocols, the Nakamoto consensus protocols. And they are fine, except they consume enormous amounts of energy. They leak value. And they destroy the environment. It's just not a friendly thing to base one's new foundation for finance on. So Avalanche works very differently from these. The way it achieves consensus, the mechanism, the messages sent, it's just very different and very, very efficient. This is independent of the DAG it builds. It builds this directed acyclic graph that I alluded to with multiple blocks at multiple heights. Even if we don't do that, it's still a different consensus protocol. Different kinds of messages are sent, fewer numbers of messages are sent, and it achieves consensus very, very quickly.
So yeah, this is all fascinating for me. I love learning stuff. This is great. So I guess I'd made some jumps there in between the way some of it works. Again, clearly, I'm not a super tech heavy. It's generally the concept of stuff that I could grasp, and I could tell that there was something special here. Again, because of the help of my friend who's a bit more technically savvy. So, aside from throughput, what other type of innovative possibilities does this type of consensus mechanism bring to the table?
So it brings quite a lot of things. So the Avalanche system is innovative across multiple fronts. And it's not just the consensus protocol itself. But let me give you the three things that make the Avalanche system different and interesting and ahead of everybody else in this space. So number one is performance overall. And so when it comes to performance, we care about three metrics. One of them is scale. So we want to be able to allow as many participants into the system as possible. You cannot currently unless you have a factory or a giant connection to the power grid, you cannot currently play a big role in Bitcoin mining. Those days are gone. Maybe 8 years ago you could, maybe 7 years ago you could, but from these days you can't really be a meaningful player in any proof of work system. You can't be a miner. Those miners, they have cables this thick coming into their facilities, and it's a big major industrial effort. So that's it's a game for a very small number of people. It's inherently centralized. You look at the number of miners in Bitcoin, there's like 19 mining pools in Bitcoin. So 19, they have centralized around 19 centers. That's a very small number. So, and a lot of this mining happens in industrial centers, mostly in China. And it's often like there was a coal plant outage and 30% of the Bitcoin hash power was relying on that one coal plant in China. So it just went down that day. So it's really terrible for the environment. It doesn't scale. It's very, very limited, very centralized. That's one. So in contrast, the Avalanche Protocol admits you and me and anybody to just join the protocol. It can permit up to millions of people to participate in every round of every decision. So you don't need committees. You don't need to delegate your responsibilities to someone else. You don't need super nodes. You don't need master nodes. It's you and me and everyone else. We can be part of the same consensus protocol and get rewarded for it. All you need is a Raspberry Pi, and you can be in the Avalanche network. There are people with Raspberry Pis in the Avalanche network. Although, it's like we don't really want too many of them, but it's possible and it's admissible. So that's pretty cool. That's scale. Second one is time to finality. The time time from when a transaction is submitted to when the transaction is finalized, immutable. Avalanche is bar none the fastest protocol in terms of finality. So you want to move money in and out of Binance, Avalanche is the way to do it. It goes super fast. It's less than a second. So you blink slowly, and in that time frame, that transaction is immutable. So the same thing takes an hour on Bitcoin. So you don't have to wait an hour. God knows where the prices are going to be by the time your funds hit Binance. But if you want to move them very fast, you go to Avalanche. The third one is the least important, but this is because there are so many people who don't understand the science. They're pretending to be, we've even got people who are pretending to be professors. Because there are so many people who don't know what they're doing, they all conglomerate around the same metric, which is transactions per second. And that's the most easily gamed metric. It's so easy to lie about TPS. So anyway, on that's called throughput. And on the throughput front, we are 3 times faster than Visa. So I'm really proud to be able to say this. There are people out there making all kinds of noise. They say 1 million transactions per second. That's as soon as I see that, I say, well, that is the sign of some fraud right there. But anyway, Avalanche is not doing millions of transactions per second. You cannot do that in a global system. But we are 3 times faster than Visa, and we are achieving throughputs that other systems are just consensus at the consensus layer. They're incapable of achieving. So that's the performance story. But this is not all. If this was all, then okay, then that's just some backend stuff, I think. But our model is different. Our approach is different. So one of the coolest things that we do is we permit multiple virtual machines, multiple assets, and multiple networks in a model we call sub-networks. So one of the biggest things that enterprises that want to use blockchains look for is predictability. You can't predict anything on the default network. Who knows what the fees are going to be? Who knows what the speed is going to be like? And so the nice thing you can do on Avalanche is you can create your own subnetwork using the consensus protocol that is dedicated to your own use case. And these subnetworks can run any virtual machine. So this has allowed us to do a lot of flexible things for companies that want to digitize their assets. And finally, part of the Avalanche vision is to support governance. So So nothing is set in stone, nothing is cast in stone other than the hard cap on the asset. So there's only going to be 720 million AVAX coins. But the rate at which the coins are minted will be subject to governance. So you and I can vote on how fast coins should be minted. So anyhow, those are the three big things. Performance, which comes down to scale, latency, and throughput. Flexibility with subnets and VMs, and governance.
So I'm a big fan. I've been kind of a fanboy of Avalanche. The other thing I kind of wanted to sidestep in here too is that for me, what's been really unique about this whole process is in 2017, I jokingly wrote like adventure capital on my Twitter feed. At that point, I really had no idea what venture capital was. I've been a big fan of things like mathematics. I like Mandelbrot's idea, like these kind of scale invariant moments where you can look in and out and see very similar properties within the universe, whether it's in markets, et cetera. And one of the things I found fascinating about this and kind of this space in general is that if you wanted to have access to venture capital in any way, shape, you usually had to be in a very small kind of group of people that had access to the deal flow. And then, the ICO boom in 2017, even though it was kind of full of frauds and scams, it was the first time I saw that kind of more open source access to the potential of a protocol or a company being launched. Whether it's actual equity in the company to me was irrelevant. It was just this opportunity that was there, and the opportunity, even with being able to get into Avalanche at $1, these kind of open distributed kind of fair launches. I guess some of the questions I'd like to go over. When you bring up most people can operate with Raspberry Pi, is that off the idea that I'm going to lock up 2,000 Avalanche as a node, and then from there I'm operating a node on Raspberry? Is that correct?
Yeah, some people have done this. Yeah.
Wow, that's impressive itself. So this kind of entry into venture capital was the first time for me where you started to see, well, we've got a global potential for the financial or even, I guess, bringing down just communication, like rails of communication of value. And I think it's still just generally people are undervaluing this whole sector, even though it's probably inflated to an astronomical amount, because you look at the automated market makers, you can see that a coin that's got $1 billion market cap has a $1 million of liquidity on the market makers. Like, okay, something is out of whack here between the front end version of what they're measuring the price at and what's actually there for liquidity. But aside from some of the, let's say, logistical differences between the actual evaluation of this space, I think that it is still undervalued into the future potential. You brought up the ideas of enterprises looking at this, and I've always like kind of pontificated in my mind, like, you've got companies like PayPal and you see the DeFi sector where there's this huge productivity in what you can do with your asset with kind of removing the middleman, because you can jump around, you can put like loan out assets depending where they're needed. FTX had a really cool like cross liquidation thing where you'll use, depending on which asset is the higher in demand at that moment, you get a higher APY, and that effectively you can put your capital to use. Like the banks have gone amok. They're like, yeah, we'll give you like 0.04% APY on a loan or something like this. But here we're just seeing the productivity of the DeFi sector. And one of the reasons why people moved over to the Binance Smart Chain was because it was smarter, but it's nowhere near as secure. It's not decentralized. It's like a quirky version of an Excel spreadsheet from what I can tell. So as these conversations grow into the enterprise level, I think that what you're talking about makes a lot of sense, because if PayPal were able to offer like the USDP or something like this, like the PayPal version, and they even said, look, we'll give you 1% APY, and you can't take out the USDP, but at least on what you're sitting on in your PayPal account, that would make all the banks like drop down, because there's no bank currently offering like over 1% APY on any of your assets. What type of conversations in the enterprise level do you think one like Avalanche would need to overcome to help bring DeFi to the enterprise level, as in comparison with right now? You need to be a fairly quirky developer to play around with like an Aave loan or this type of thing.
Yeah, what a great question. I think we've been having some very, very successful conversations. And I can tell you some of the things we did right, and I can tell you my vision for DeFi for exactly this.
I'd love
So
that.
one of the things, and this is a side question, but let me also bring this in. There are a lot of people here who are like, well, are you an X killer? Are you trying to compete with this, that, or the other, et cetera, et cetera? And the kinds of people who get fixated on those kinds of games are always the losing projects. From the get-go, I've said this many times, I'll say it again. From the get-go, the vision of the Avalanche project is to digitize all of the world's assets. Nothing else. We are not trying to compete with the dollar. That's Bitcoin's job. Bitcoin is trying to be a store of value. It's going to go against the dollar hegemony, and it's got a tough job ahead of it. Bitcoin was the first kiss for most of us, right? He really proved that this thing could be done. Hats off, much respect. And they're on a different path. That's their path, that they compete with fiat. And that's not my goal. We're not trying to be an internet computer. I think that's a dumb idea if I've ever heard of one. But good luck to the projects that are trying to do that. We are here to digitize trillions and trillions of assets that are just not accessible to normal people like you and me. There are many, many, many people out there looking for funds, and those funds are stuck in different silos. So I remember when again, I was younger, and Putin was printing Russian bonds, state bonds, and he was giving 14%, insane amounts. Like, nobody trusted them. They just defaulted. I was like, I want to make this bet. They defaulted once. They're not going to default again. I want to put and I couldn't. You just could not. And we're living in the most industrialized nation on earth. And, sure, maybe it's a rival country or whatever, but there just was no way to get into that. And I would have taken that risk. He paid off. I did not get 14%. And it's just, you just can't. So there's a lot of capital, and it's just not accessible to people. So our biggest value proposition is, let's mobilize those things that are on people's balance sheets. Let's turn them into digital goods. Let's allow them to be traded across the globe. That's our vision. So when we have these conversations at the enterprise level, we've been having these conversations at both the state level and the enterprise level. So I've been talking to central banks of different kinds. And so they have their own concerns. But at the enterprise level, they have a lot of legitimate concerns, and there are some really interesting responses that we give. The main issue has to do with predictability. We're going to issue, so an enterprise has something on its books, and it's going to digitize them. The main thing they want to know, and the main thing they want to do, is have control over the full asset lifecycle. Tomorrow, something's going to happen. They don't know what. Laws could change, or they discover something new about the asset. They decide to go into a different business plan. Something will change that is unanticipated, and it's worrisome to them that they lose all control over the asset once it's issued. The other thing is compliance. They want to comply with laws. The laws are there for a reason, right? And you don't want to have ISIS being funded out of any project. There is not a single person I know, or at least that's not true. There is not a single person I hang out with that would like to fund ISIS. There are people out there who would love to fund ISIS. We just don't, most normal people will never want to have anything to do with this. The laws are there for a purpose, and yet they are so hard to enforce on a blockchain. And so the subnet idea in Avalanche allows us to accommodate these things. So you can create a subnet in Avalanche that is specific to the US, that where every participant says, I'm going to abide by OFAC rules. You can create an EU subnet where the nodes agree to uphold the GDPR restrictions for data on the blockchain. You can have an India-oriented one that obeys Indian rules. Or you can have nodes that have, you can say, I want to have a high-performance subnet. I want to run the protocol faster than normal. And to join this, you have to have a lot more memory and a lot faster CPU. That should be possible as well. So you saw the Bitcoin block size wars. where people fought over like, what shall we target? Well, on Avalanche, you don't have to have a fork for this. You create a subnet and you say, look, if you want fast transfers, you go and use this. If you want slow transfers, you use that. And you pick which one you want to validate on, and the market will reward whichever there is demand for. So these things are possible, and these have been, the subnet idea has been a huge winning combination. And the related thing is supporting multiple virtual machines. There are lots of programmers out there that don't know Solidity, and they're enterprise programmers. Well, for them, we have a WASM VM. We support WebAssembly. So you can just write in whatever language you like. We compile it down to WASM and we can run it on the WASM subnet on Avalanche, which is not deployed in production, but it's actually under works.
So, when we talk about digitizing assets, there's a whole bunch of things that come to mind. There's a lot of talk around the NFT sector, and a lot of the hype around NFTs have gone from the art space, but an NFT could represent like a piece of land and stuff as well, correct? How do you see the it's kind of one of these weird conversations in the past where people are like, oh, well, you could just store a land registry on an Excel sheet. It's like, well, if you look back in history, almost any time countries have gone into war with one another, they would directly try to attack the land registry, because it's there. I think it was Henry DeSoto's book, The Mystery of Capital. Like, how can you start to capitalize assets? So, I've got land. I'm going to use the land or my productive business. I'm going to use this to take out a loan as collateral. How do you, and they've always argued, well, you could just put that on like a database or something, when it's extremely important to have an irrevocable or a database that you can't just change very easily. How do you see the uptake of some of these more physical assets onto the digital landscape, aside from the art world? Because I think that's overhyped. I'm more interested in, like, say, a car or a land or a productive business, essentially.
Okay, so here's what I think about the NFT space. So it started out with, I think, with everybody's mental model was set on CryptoDs, trading cards, those kinds of assets. I think that's a fantastic field. There's so much money to be made, and that market is really exciting. And they're really wonderful. That's really fun. Obviously, what you are getting is proof of ownership and an attestation to authenticity. Right? You have something. This is one of the 50 originals sanctioned by the artist. You can always right-click and copy the image, right? You're not getting a unique image so much, but you're getting ownership of it, and that's really very different. But that's very superficial also at the same time. There is so much more that can be done with NFTs that we've only scratched the surface of. One of the most exciting things are virtual assets being NFTized. So what do I mean by a virtual asset? Credentials. I've been saying this for years, by the way, and nobody has done this. Hopefully someday someone's going to listen to me, and if nobody does, I'll do it in the next few months. But credentials should be in NFT form. Like, what the heck is my driver's license? Right? It's just a bunch of, it's a plastic sheet and whatever else. Instead, what you could have is a demarcation on blockchain that says, the person who has this private key is authorized to drive by the state of New York. That's the kind of thing that we should have. Similarly, let's see what other virtual. There are many other virtual assets like this that don't have a corresponding thing in the real world. So this doesn't answer your question. But what I am saying is, there are many assets that are intangible that are perfect fits for a blockchain. And they start with credentials. When you buy a bag, how do you check that bag is authentic? There's if I just step outside my apartment down here, there's a guy on the corner selling handbags, right? They're not $30,000 Hermes bags or whatever. They look like them. But so how do you know which one is authentic? Well, we have the tools. We have the tools to do this with NFTs and other mechanisms. And so I'm really excited about this. And so that's one path. There are these things called physically unclonable functions, PUFs, PUFs. And if you were to weave certain things, certain tiny little devices into the fabric of your t-shirt, into the material of a handbag and so forth, then you can certify that handbag as authentic. And it is infeasible for somebody to copy that puff. That puff is manufactured once, it's some unique thing, and by virtue of its construction, it cannot be replicated. At least it cannot be replicated easily. So it costs a lot. It probably should cost more than the handbag to fake the puff. So if you can do that, and that's possible to do with micro lithography techniques, then you've got really cool. You've got a very cool device. So that is a good connection to things. I mean, I can go on like this, but there are many assets that are tied to real world goods that I would like to see on blockchains and blockchain form. Many people are trying to carry over what they know from the real world into the blockchain world. There are countless people out there who think that, well, if this technology is any good, we're going to see stocks issued as tokens on a blockchain. I can tell you that stocks on a blockchain will be one of them. I mean, I know that there are companies doing this, but this will be an area that takes off the last. Why? Because it's full of incumbents. The incumbents will fight tooth and nail against it. And they make such a, I mean, I'm staring at Wall Street when I turn left like this. So those guys over there, they've got a good thing going and they won't let anybody interfere with it. That is not where the innovation is going to happen. The innovation is going to happen in those assets that nobody knows how to digitize. So income sharing agreements, this is really big, right? We're talking to a basketball player, for example, who's trying to make this a thing for the NBA. And, this is an exciting area. This hasn't been explored. There is no market for income sharing agreements. There are many commodities that are not traded on any exchange. The Chicago Board of Mercantile Exchange, what do they have? Pork bellies, oil, and this and that. But there's many other commodities for which farmers want hedging options that are not supported anywhere. And so we're going to see these kinds of fringe applications, the long tail, slowly come in to blockchains. It is not like if anybody is out there waiting for the killer app to be something they already know, if they're trying to move what they know to the new area, it's not going to happen that way. Newspapers were, sure, they came to the internet, but for them to really start making money off the internet took 15 years. They were one of the last to make money off the internet. The very first things to move to the internet were blogs, right? Those people started making money, blogs, these things. So with every new technological innovation, it's going to spur its own technical improvements. And we're going to see exciting developments at the fringes that are not already well served.
Yeah, that's a great point. So I've got some abstract questions I want to save for last. We'll push the button, but what I wanted to ask. So Avalanche has been up and running for since about, I think the live was in August. Is that correct? August.
September. We're a very young system. It's only since September.
Okay, so since September. Yeah. What is the roadmap for like the next 1 to 5 years for Avalanche? Are there new implementations coming? I had a quick conversation with Mark Stanwyck yesterday from Avalanche. Sorry, my interest in venture capital. I'm always trying to find where there's deal flow, etc. What kind of new exciting things are on the roadmap for Avalanche?
Oof, too many to list. There's so much happening. So. Technically speaking, we are currently in the midst of this new upgrade called Apricot. It changes quite a few things at the very lowest layer of what's stored on the blockchain, and it's going to give us a bunch of technical advances that I am really excited about. They're a little too detailed to really get into, a little too geeky, but the upshot should be a bunch of new protocol improvements that give us lower fees, even lower fees than we do now. Just to give you an idea, even as we spoke 2 days ago, it was costing hundreds of dollars to interact with Uniswap, and the same operations cost about $1.50 on Avalanche. So it's already incredibly cheap, but I want to take the individual costs down. And we also have some other additional improvements to improve the throughput of the system by changing the backing data store and so on. So this is the geeky low-level stuff. We have new assets coming on board. We have new partnerships coming on board with some really, really, really big, exciting companies that are in possession of really exciting digital assets. What else is happening? There's so much. There's a new bridge coming out that nobody has seen before, and we have some DEXs. The DEXs that exist today are not very good in the sense that they permit a lot of front running and they don't provide any confidentiality. So I'm really excited about DEXs that essentially give power to the people and take it away from the bots, take it away from other elements. And there are other lending platforms coming online that I'm excited about. And overall, there's so much excitement. I think if you spoke to Mark from Avalanche, there's another thing that's happened to you. And it's strange. And I never thought this would happen. Let me call this out because you brought out venture capital. So in the old days, VCs were king, right? If you had a good idea, you would go to a VC. And then you'd say, hey, let's, whatever, give me some money, let's do this and that. Now, if you have a good idea, you work at, these young energetic teams will find a way to put a token into it. And so they can immediately get funded. And so funding, there's a lot of money floating around, sloshing around in the system, thanks to the stimuli, et cetera, et cetera. And there's hopefully going to be even more going forward. So the deal flow has shifted. So what I've found is that VCs are now coming to blockchain companies and saying, hey, we'd like to get involved because these companies are bottlenecked on the technology. They're coming to us and asking for, can we get this into the underlying system? Can we do this? Can we do that? And or how does one do this, that, and the other? So they're coming to the subject matter experts. So this is a different kind of economy, where knowledge and know-how is king, and money and capital is secondary. So that's happened as well. So I'm really bullish on Avalanche. I really like that effort. Really, really excited to see what they're going to incubate and launch on top of Avalanche.
Oh, so yeah, I was muted there. Me as well. I've liked how this has opened the opportunity for someone random like me who lives in the jungle growing ayahuasca to be able to search out deal flow and be like, oh, okay, one of the things I loved about Bitcoin was this opportunity to kind of pick my own money or pick my own investments. The fact that someone in rural Ecuador, if they've got an internet connection and they've got a small amount of capital, if they see something that they think is really valuable, they can participate. And that kind of globalization of participation is so huge. I really don't think people have taken in how big this space is going to be over the next 10 or 20 years. And then to have venture capital.
Can I add something?
Yes, please.
Because you're triggering something that I really want to get across. It's such a great point. So, again, people tell me, hey, when is this thing going to take off? Obviously the killer application is stocks. When are we going to see Apple stock on the blockchain? I couldn't give less of a damn about Apple stock on the blockchain. Okay, if you want Apple stock, there are so many regulations, there's so many incumbents. They will send you to Robinhood. Citadel will sit in front of that trough. They will cherry pick your orders. They will front run your orders. They've got their business model down to an art. They are going to protect that at all costs. What we will see is the next Apple is not going to be going to NASDAQ. It's going to be issued as an ICO. It's going to start out with a token. And so that's fascinating. And so we're not gonna grow by taking over Apple stock and putting it on top of whatever platform. We're going to grow because the next batch of the next decade of good, exciting products and innovation happens naturally in token form on blockchains. And this thing is going to grow and grow and grow. And at some point, it's going to be so exciting that people over here are going to cut over. And you know what? This is already happening. So at Citadel, of all places, Citadel of GameStop fame, the CEO has put a ban on traders talking about crypto at work because he's sick and tired of all of his traders talking about crypto at work. This is insane. So the crossover point, we're reaching it. I'm always early. So, when I say these things and then people catch on to me a year later or 2 years later. But this is happening, and it's inevitable because the tools are so gorgeous. The platforms are open. They're so easy and natural to use. People who are, sick and tired of dealing with Ethereum fees or Ethereum delays, they should try Avalanche. It's instant, it's quick, it's cheap. And so once you use that, what are you going to do? You're going to log into a clunky thing on your Windows, like work issued trading platform or whatever it is that these Wall Street types use. It's just it's night and day. The new tech is clear. The new generation knows where the excitement is. So sorry, that was just my rant.
No. It was a great point. I'm a huge fan of Cathie Wood. She's probably the only person I listen to in the market that has any sensibility about themselves. She said something the other day that was akin to as well. She's like, Apple or Amazon and Facebook, like they're set. We don't really care what they're doing. It's the innovative places that we're most interested in because that's where you have these asymmetrical returns. Like Facebook and Amazon can't go up so much. It's one of the things that I think it's always people get wrong about the comparison. Like, well, if you bought Amazon at its opening price, it's like, well, yeah, but you're not including what would happen if you bought Amazon at private equity. And that's what we're seeing. We're seeing this kind of venture capital early stage deal flow. And that's what Bitcoin was to me in the early days too, is this asymmetric bet on something that was basically venture capital, where you're investing into such an early day or an early stage of the product that the upside is orders of magnitude higher than you could ever get from something public. By the time it's gone public, like it's not worth it anymore. You're getting retailed, basically. That's what they're saying. The initial public offering basically says you're retail and we're not. That's what it says, right? Whereas here we don't have that. We have this instant access to liquidity. Anybody around the world can participate. The innovation is happening here. And I was a little upset when Michael Saylor came out and was like, yeah, it's only Bitcoin. Everything else is a shit coin. It's like, dude, you're the guy that bought voice.com for $8 and sold it for 30 million. Like, how can you not understand early stage focus on any type of digital asset at this point? It's just like he's so disconnected and disingenuous from how he became successful in the first place. It's so crazy. Like the people get caught up in these almost a religious belief in something instead of being like, I've played music my whole life. I love picking up new instruments because it reminds me how bad I can be at something when I first show up again. Like, oh, I have to relearn how to like walk again. I've learned to try to find always this, what they call beginner's mind in something, to come at it with a really open heart and be like, yeah, I'm just pretty much here to learn. Like, I have no idea. I'll argue even what I believe or against what I believe in just to see how much we may or may not be right. So I want to be cautious of your time here. And I know we've ran to the hour. Do you have a little bit more time to go down another rabbit hole with me?
Yeah, I do.
Okay.
Yeah,
I wanted to ask you more of a philosophical question, and I've got a few like very short, brief questions we can fire off at the end, just so I think the Bear family would love to hear it. We were talking about government regulation and digital identifiers. And one of the things I've always been like on the fringe worried about is totalitarian governments using these types of technologies to really control or push societies into a pigeonhole of where you can like, oh yeah, now you can no longer buy or sell in our ecosystem. Is there ways within these systems to keep the bad actors from that level out? Like, how do we draw morality into capitalism or business or technology in general?
Absolutely. I think one of the biggest things that governments have traditionally done is deplatform unwanted actors and seize their assets. And so, I mean, every single person, if you look around actually and ask your friends, every family has, if they go back far enough, there is some uprooting story. Right? My grandparents were uprooted. I'm sure, like if you look around, every family has experienced this at some level. And uprooting essentially always means you leave behind a lot of assets. And so for many people, it means you leave behind everything you've got. You start from scratch. And so one of the most wonderful things about crypto is, you can just take everything you've got. It's portable. There's no stopping anybody. So seizure is off the gate, that's a fixable problem. But going forward, as we build a bigger economy, as we get better services, as we build more and more complex layers on top of this, how do you keep people from being deplatformed? Even today, new regulations could make it very hard for certain people to access on-ramps and off-ramps. So that's really problematic. And and in fact, there are also, I've seen, or at least I've heard discussed ideas where regulations are pushed into the fabric. So they want certain people to not even be permitted to use a system. So we have some tools in crypto that can push back. We have obviously zero knowledge proofs. We have obviously many other cryptographic techniques for making it impossible for bad actors or for ill-intentioned actors to deplatform users. And so it's a very complicated topic. It's technically it has a lot of ramifications, but it's very interesting. So the short of it is, if you start from a foundation where there are gatekeepers and then there is just what I will call the plebs, the gate kept, right? The people who are outside, the dirty masses. If that's your foundation, then the man will always be in charge because he can easily control the gatekeepers, right? So that's the system we've got today. But with crypto, we can change it, and we can we can disintermediate the gatekeepers. Is it going to be easy? Not really. And is it possible that there will emerge a new regulatory framework, hopefully mostly at the fringes, hopefully not affecting that many people, hopefully not usable in a targeted fashion. But I worry about this. It's going to be a constant battle. And in that battle, we're all united. It doesn't matter which crypto people have invested in and so forth. This is a battle we have to fight together to make sure that the regulators don't come in and lead to bad outcomes for societies. So yeah, and you have to balance it. To be frank about this, you can't have a free-for-all system either. Right?
Yeah.
There are outcomes we want, right? Nobody wants terrorists to run amok, right? That's just obviously not going to be tenable. So what do you do? Well, can you do that? So there are ways of getting the societal outcome you want without necessarily doing the enforcement in the system. So my analogy for this that I sometimes use goes back to 1993. Do you remember those days? I don't know if your audience remembers those days.
Oh, I know some of us do. Yeah, actually, surprisingly, most of my audience is over 40, but and then a good chunk 34 and up at least. Yeah, and I usually steer people younger away.
Okay.
I'm like watching chess. I'm not all that exciting.
Oh, I do too. You bring on people like me who talk for too long, and we drive away the younger audience. But here's something that happened in 1993. The web happened, right? Well, when the web happened, what happened next? There were discussion forums. Remember those forums? And people started posting things, and people started saying whatever the heck they want. And some of those things are pretty nasty. Some of them are libellous. Some of them are slanderous. Some of them are really bad things about politicians. And what does your Joe Schmo III, senator from some state, what's his reaction? It's always a he, of course. What's his reaction when he's attacked on the internet for the very first time? So I will tell you his reaction. His reaction was, let us introduce a bill that requires everybody to have a driver's license for the internet. You want to go on the internet, you have your special number, and then you show it to your ISP, so your ISP knows exactly who you are. And so therefore, when you're on an anonymous communication channel and you say something bad about me, Joe Schmo III, I will come after you. That was his first reaction. And the computer networking community fought against this. This was stupid. It would not have achieved the aim, and there would be many other ways of going around this. It would have simply hampered innovation. And now, if you look at what's happening on the blockchain, in the blockchain area, is you see the same instinct. Oh, something bad is happening. Let me go after it. You want to use the blockchain? I will force you to do this, that, and the other. That's the initial reaction. I am used to having a driver's license for everything. I am used to a newspaper checking your ID before they publish something. So why not have a driver's license for the internet? It seems natural to these people. And yet, if you give these people 10 years, first they calm down, and then afterwards they develop an immune system, they develop a better set of mechanisms for getting the results they want. So I'm very hopeful. I'm very optimistic. And I'm actually somewhat, what's the word I'm looking for? So I'm actually quite happy about what has happened in the US so far. The regulations have been light-handed until now. So I'm hoping that that trend is going to continue, that the regulators will not make themselves look stupid by trying to regulate the unregulable. So these systems are very difficult. They're designed from the ground up to not be regulatable. So they haven't passed any stupid laws in this country, at least. And so I'm happy about that. And I hope that that trend continues. And we will find ways to get the societal outcomes we do want.
Beautiful. Okay, so the last three questions I have nothing to do with blockchain. It's just for my own entertainment value now here. What's your thoughts on ancient civilizations? Was there a civilization before what most people think? Do you feel?
Do I feel that there was an ancient? That's like ayahuasca talk. That's like you've spoken to the machine elves, and I have not. So I don't know about that.
That's an answer too. I don't know either. That's why I like asking. I want to know what other people think.
I'll tell you this. I grew up with fantasies about the lost city of Atlantis.
Yes, so, there we go.
Funny, given where I lived, because I grew up in Turkey, and there were many cities in Greece that sank because of in ancient Greece. That sank due to earthquakes. And
got Göbekli Tepe out there too, one of the oldest sites we've found in human history, which dates back to like 11,500 years old.
Oh yes, that's right. That's right. So these things are ingrained into people's consciousness, the collective consciousness, and it gets transmitted. And anytime you have this kind of loss of culture, you kind of wonder, what did we lose? What did they know that we didn't? And even some basic things like nobody knows the formula for Greek fire, and that's not even ancient. It's only 500 years old, maybe 600 years old. So there are things that we've lost, and on occasion I think about what it is that we did lose, and I wonder how to get back. Also, the undecipherable languages, they're fascinating. And you live in Costa Rica, so South America has quite a few of these that we just don't know, like the undeciphered indigenous languages that there's like encoded stories that nobody can solve what they mean, what they say. And that's really fascinating to me.
Yeah, I'm a big fan of mystery as well. Okay, the next one's also a mystery question. Just roll down this line. I can hear, and this is because so the Pentagon it was part of the stimulus bill that they would start releasing the information that they had at least about UFOs, not necessarily what they know of the UFOs, but about the UFOs, that they're actually there. What's your thoughts on the potential in the academic and the scientific community about the Navy and the Pentagon admitting that there are things that seem to defy our regular understanding of physics today?
Yeah, that's a very, very good question. I've seen some of the footage that they released over the last year or so, I think over the last 2 years, I think. So there are different branches of the government that were doing secret things. So I believe some of these are just essentially, left hand not knowing what the right hand is up to. Some of them are natural phenomena as yet unexplained. So the certain frequencies that people hear underwater, or weird, atmospheric events, ball lightning is the common, when you don't know what anything is, you say it's ball lightning,
It's a weather balloon, yeah.
It's ball lightning. So I can't wait. I am convinced I'm convinced that if you look at the Drake equation, that the probability of us being loners in the universe is very, very small. The Drake equation tells us exactly what the probability ought to be of other smart civilizations. I can't wait for us and for our children to make contact. It would be fantastic. And I hope we are ready, having built a happy, prosperous society, because it's very, very, very hard to be contacted. Ask anybody who was colonized what it feels like. So it's
Yes, yeah, right. They were always the worst of the receiver of that end of the story for sure.
exactly. Do not trade your stuff for shiny technological gadgets from other places. So yeah, it's really interesting. So I hope we are ready for this as humanity, and but it all starts with a focus on what we have now. I think it all starts, for me at least, with building a just society, building an equitable marketplace for things, where anybody can compete with everybody else, that we are not slaves to powers that be, that there are no gatekeepers, that is disintermediated. So yeah, so I'm really excited about, I brought it back to blockchain. Sorry, I shouldn't.
No, no,
I'm
it's good.
really
It's good.
excited about the movement.
I agree. I think that there's a general focus on the society coming together. You know, even and one of the reasons why I asked about the academics' thoughts about it specifically is because and you know, it's almost even a highlight of the selfish mining, where a lot of people become religious about things where they're clearly wrong, and they'll stay that way for a long time. Like, you know, I'm always looking for those moments. I think it was one of the Nobel laureates who was like, yeah, we kind of our science advances one funeral at a time as these people
Exactly, it does.
let go of those egos. Okay, and just to follow some sort of loop here, do you have any questions for me? You get a one fire shot.
No, not off the top of my head.
Perfect.
So we did, prior to us starting the recording, I did ask you about how long you've been in Costa Rica. I have a lot of questions, but I'll save it and I won't bother the audience with it. That's a fascinating lifestyle. And I think it's a testament again to this new technology, that you can be out there and participate so fully in it. That's really wonderful. I want to hear more about it. Are you going to be oh, here's my one question. Are you
Yeah.
going to be at BTC Miami?
So as far as I know, I'm not legally allowed in the United States. I'm not. I'd have to double check. My lawyer says I can probably go, but I haven't checked back since like 2006. I'm a Canadian. I grew up in Canada.
I see.
It's kind of a boring story of just basically a runaround to some degree or another. But I don't know if I'm legally allowed to go. So I'm just chilling out here in the jungle. So sadly not. Otherwise, I'd love to hang out and meet you in person. If you ever end up in Costa Rica, we can go surfing.
I would love to. I would love to. And I can't wait for one of our conferences. We should hold these conferences outside the US, because there's a lot of people in the crypto community who don't want to travel to the US for whatever reason. So
Yeah.
I would love to meet and hang out with you. That would be wonderful. So that was my one question.
Perfect. Even it's been a pleasure chatting with you today. Thank you so much for sharing your time and letting us run over into the abstraction space. I really appreciate that. For everyone that wants to know, we'll have a bunch of the Avalanche links down below where you can follow Emin and his Twitter as well. Always like keeping up with everyone that's interesting in this space. I hope we can have you on the show again in the future as things start to develop and you guys gain more ground and traction with everything that you're building. Again, I'm a huge fan of what you've built. Thank God for people who are technically smarter, like being able to hold my hand to be like, hey, over this way. I'm like, oh, okay, hey, like I get it now. So again, thanks for going through that and helping explain some of these things that are definitely outside of my wheelhouse. I appreciate that. Yeah, give us a thumbs up if you like this content, ladies and gentlemen. Leave your thoughts, your comments, your questions down below. I always do my best to answer those. And yeah, I look forward to seeing what Avalanche has in store for us over the next 10 years. I think it's going to be a really exciting ride.
Thank you so much for having me, Tio. This was a lot of fun.
Ciao.